What's going on, guys? D. Anthony here with Evolution Traders. In this video, I want to show you guys how you guys could capitalize on uptrending or downtrending days where realistically, the market fails to kind of have any sort of steam going the opposite direction. So today we're down 331 points. It's currently 8:31 in the morning Pacific Standard Time. Now the NASDAQ 100 is trading at 17,930. But if you guys have been following my videos for quite some time now, you guys know that I teach a couple of strategies on YouTube. One of them being the 20 SMA, momentum drive play, right? We're looking for those short-term changes in trends. And, since market opened, we have not traded above the 20 SMA. So realistically giving you no real area of interest to kind of take that short position. However, if you kind of look at the market, right, you need to be a little bit of an adult about things and kind of read the market, get a good idea of where a price can be going. So this is how I kind of read the market in the pre-market, right, or in overnight session. So what I would be doing here is looking at the overnight session lows, okay, that being here at around 2:10 a.m. Pacific Standard Time. Now notice these lows here. If I was to kind of draw a line, below these lows and kind of just, simply go all the way across here, we have a little bit of a demand zone, right? So if we kind of traded into this area, we bounced and then we came down. Obviously, if we did not get any push back up to the upside to kind of take out these highs, you would be looking for that continuation on the second leg down. So again, first leg down, a little bit of a pop, second leg down. Does it double bottom and bounce, or does it start to flush? And you can see here, we start to have a massive flush, which in my opinion is very, very good for the NASDAQ 100. Essentially, since late November, market's essentially been going straight higher. You always need those kind of resets. You need a little bit of a pullback. Now, again, is this going to be a significant pullback where we continue to, pull back for a week, 2 weeks, 3 weeks, a month? Time will tell. We have to kind of just take it on a day-by-day basis. But the entry that you could have used here is taking an entry through the overnight session lows, whether you want to take that first initial position, which is going to be the opening candle on the New York session at 6:30 in the morning Pacific Standard Time. Whether you're going to jump in on this candle, you can do one of two things. If you do decide to take this candle when we take out the lows, you can use that same existing candle's high as a stop. Now, if you're going to do that, make sure you kind of, do the math in your head very quickly, see how many contracts can you play. Realistically, this was a 30, 35, 40 point stop loss. You probably would have wanted to play on the micro side of things. So trading MNQ versus the regular old NQ. That way you can afford to, handle the loss if you were to lose. Now, with that being said, from there, how many micro contracts you play is all based on dependent on how much, what your account size is, what you're looking to risk per trade, so forth and so forth. And those should all be things you should already know going into any trade. So for example, if you're going to give yourself a 40-point stop loss, you have to quickly do the math in your head and say, if this trade loses and I'm trading one contract, I'm going to lose around $80. If that's okay, and you say, I want to trade 2 contracts, that's 160. If you trade 3, that's 240, so forth and so forth. So let's say for the sake of the video, you want to trade 3 micro contracts, max loss of around $250. You would try to target at least $250 on the return side. So just to kind of make that risk to reward work in your favor. Again, going into the trade, even if it does not work, the most you're going to lose is $250. Now, as long as you handle stopping out where you should stop out at, and not holding and hoping if it starts to go against you, is a different story. But if you go into the trade risking $250, you're trying to target at least $250. Now, again, if it goes in your favor $100 and then comes back to stop you out for a $250 loss, that's nothing to be upset about. You go in with a plan, you have a plan, you take the trade. This would have paid, at least that 1-to-1 on that 250 there, risking that top candle. Now, there's another way to kind of play this. You could also take those overnight session lows and jump this, but think more scalp. So some of you guys like to trade mini contracts. Again, as soon as we break that overnight session low, you get in here, 1, 2, 3 mini contracts. As soon as the position starts to speed up and you see the P&L on the screen start to go green, 200, 300, 400, you need to just quickly get in, get out. Now, this is one thing that I kind of teach a lot in Evolution Traders. You know, the saying goes as this: get in, get green, get out. That simply means identify the move. Okay, the move is here. I'm going to take the first entry, which is going to be that opening 5-minute candle through the overnight session lows. That's my reason why. And I'm looking for this to work, but work immediately. Now, if you're trading mini contracts, 2, 3, 4 mini contracts, you're not going to be able to give yourself 30, 40 points worth of risk. So it needs to go in your favor like right away. So as soon as you get into this trade, you know, give it 10 seconds, 20 seconds, a minute. If it's not green, you got to quickly get out of that trade. Now, what's the next way that you can kind of take this trade? The next way that you can take this trade is using the same overnight session lows, but waiting for this candle to close. So if this candle closes here, it's a 63-point candle range. This would be your stop loss. Again, you would have to enter here on a following candle that confirms you know, the candle that closes below the overnight session lows. Notice here on my chart, I'm looking at the big chart, also closing below this linear regression channel. So we've got a lot of room down there. But again, if you're going to risk 63 points, you have to assume that you're going to lose around 125 bucks a contract on the micro side. So if you're going to trade 2 contracts, that's a total of $250 lost. You're trying to target at least 63 points to the downside. Now, again, can you take profits off at 40, 50? You know, sure. Can you hold it for a little bit longer? Sure. But for the sake of the video, I'm going to use a 1-to-1 risk to reward ratio just to keep things very, very simple. So stop loss goes here. Entry candle is at the close of the candle that breaks below overnight session lows. Your entry candle is the following candle, 6:35 a.m. Pacific Standard Time, and you're targeting 63 points to the downside. You lock in those gains, you turn your computer screen off, you come back tomorrow. I hope this video helped you guys. If you guys want to trade with me each and every single day live, make sure to join that Discord link down below. I've got video lessons in there, courses, mindset, strategies, multiple different strategies, trading with awesome community group of people. And I also do one-on-one coaching and mentorship in there as well. You could set up a call. But I will see all of you guys on the inside. I'll catch you guys all tomorrow. Hopefully you guys made some money today. Good luck for the rest of the trading day.